So, welcome to our daily webinar. It's still Tuesday, 30th of January, even when we started a couple of minutes later, but sometimes technique is technique, like you know, and like we say in Germany. So let's have a start. Real-time daily trading ideas. We have 5 days a week. We have 5 different traders. Today it's Tuesday, so it's Paul's days. We will speak about trading ideas, strategies, market screen, and maybe 1 or 2 questions of your side directly answered in our webinar. Forex and CFDs, and we will start like with every webinar, of course, with a risk disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. If you are a starter, please start with a demo account, make yourself familiar with the leverage effect, your trading, long and short, and your personal risk management. All details about the risks and how to apply for a demo or real account you will find, of course, at our web pages, admiralmarkets.com, for example. This is me. My name is Jens. I'm calling here from the Berlin office of Admiral Markets. My English is made in Germany, but hopefully some of my quality too. But I'm not the main speaker. I'm just the introducer. The main speaker is the day trader of today. This is our scheme. On Monday, usually it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Mike's day. On Thursday, it's Leonard's day. And on Friday, it's DX day. Today's actions are tomorrow results. Our leading day traders live. Yeah, and for sure, we are happy. If you like to trade Forex and CFDs, you will do it with Admiral Markets. You will get many benefits only at our side. For example, one of our bestseller products, DAX 30, the German index CFD, typically fixed spread of just 0.8 points without any minimum stop distances, without any commission, starting from 0.1 lots trading, mini lots, and many more stuff. Check it out at admiralmarkets.com. At our webpage, of course, you will find more about our regulatory background if you like to see that. And if you like to call us or email us or visit our YouTube or Facebook sites, here you see everything displayed. So enough from my side. Now it's time for Paul. Good morning, Paul. What is your view of the markets today? Let's have a nice start.
Good morning, everybody. I hope you can hear me, and I apologize for the delay. It's always the way you do a live demo, and then 3 minutes before your computer crashes. So I apologize for that. I've had to switch across to another computer here, but as always, the markets wait for no one. But I appreciate your patience, ladies and gentlemen. It's very kind of you to do that. So whilst they're just my charts just sort of upload there a bit, let's have a little chat about the markets in general. In the last couple of weeks, what we've talked about is the sort of the impact of the dollar, and particularly the dollar index. I'm just here we go, just logging into an account on here for us. So just being able to talk about that sort of dollar index and how the impact of the dollar has basically just been for it to collapse, massively over the last few weeks. As always, that provides us with an opportunity. Just 1 second. Hopefully that will bring us in, and we'll look at that. And I've got a few little trade ideas for us to go through today. Last week when we talked about it, the markets were quite quiet. The markets were very quiet, and when we talked about how markets are a little bit like humans. We surge, then we rest. We surge and then we rest. And last week was a bit of a rest week. But now in this last week, okay, we've had a bit of a surge. The markets are partying. Everybody's out in their fancy glad rags. Everyone's wearing their sequins. The markets are looking wonderful, and that provides us with opportunities. And part of that is about traders, about understanding as the market goes through that sort of reasons of surge, rest. And so then we look at, well, how does that provide us with an opportunity? So let's have a look at the big one that we like to talk about in terms of both the dollar index and also the euro US dollar. Here's what we're looking at here. I'm just going to move some elements around here. We'll do that. So here we have euro dollar here on the daily chart. If I just zip up to the weekly chart here a little bit more, we can see that we've had a great move up, okay, great pull up, okay. You can see what's happened there over the last few weeks, but not surprisingly, we hit that kind of 125 level, and we've had a little bit of a reaction to it, okay. We had a little bit of a pullback from it. And that's what I've been looking at today in terms of how do I trade the dollar and how do I use that with sort of both the euro and the cable, the sort of the pound against the dollar. if I kind of move down, sort of start to move down through the particular time frames, we can see here, we have the daily chart. Although, we had a rejection of that 25, it's drifted away. We've already started to move back a little bit up, and that's kind of what I'm interested in here. All right, so if we look at the here we have it on the 4-hour chart. What I have here is, we can see this 4-hour sort of completes at about 10 o'clock, this particular candle. And this is what I'm particularly interested in. Hopefully you can see that, price has drifted away. It's drifted back down to sort of levels of support around about 123.25. And what I've seen there is it's sort of placing a double bottom there, Not only that, I'm kind of interested that the double bottom here has completed with, what I would call, you call it an engulfing candle, you might call it a key reversal candle, and that provides me with an opportunity. It starts to get my sort of my dander up in terms of being interested in putting on the trade. I recognize that over the last few weeks we've talked a lot about sort of mean reversion trades. Well, the reality is, euro dollar is still in its uptrend. We can see price is, above its 50, it's above its 200 period moving average. And what we're looking for is, well, how could we sort of, join that particular trend? So the kind of trade I placed, and I'll place it here on also the Admiral Supreme edition here. We had a fantastic, this mini terminal thing is fantastic. It's an absolutely brilliant piece of kit for traders to use. It makes things much easier. And what I have is I have a little limit order here in, so it's 120 around the 123.60 area, which I'll place. I have a stop just beneath both the lows and the sort of the period moving average, and then I'm looking for a sort of an assault back up towards around about the 124.90 level there. Okay, so what I'm expecting is price might just drop back a little bit. Okay, just drop back in just in a small part there, just drop back a little bit area into the sort of around about the kind of 50% retrace of that big engulfing candle. My stop is, in a natural place beneath, the lows, beneath the 50. And then, I have getting ready for a price to sort of assault back towards that kind of 125 level. So, within that looks at, we're risking, round about sort of 30 pips for a possible target of around 130. Which starts to give us a very nice reward to risk. We're edging towards, between about 4 to 4.5, reward to risk. That's how I like to work. That's how I like to have a good asymmetric reward to risk ratio. So I'll be watching to see if, how price reacts to this 20 period moving average. See if it sort of pulls back, as I said, towards around about the 50%. Even on a sort of, let's say, a microcosm of the markets, we still get that surge, then rest, surge, then rest, and that's what we're looking for. We've had a little bit of a big surge, we've had a rest, we had a little bit of a smaller surge here, a little rest pulls us back, and then we get a surge back up towards the levels we're looking at. Once we're up there, well, then we're looking at, are we in sort of, double top territory on the daily chart? And that's that'll be a different conversation for a different day. But it's about building that picture of, trades show themselves up and how we're able to sort of take that on board and start to build a bit of a scenario analysis about how we look to trade. So there we go. There is a trade idea on the euro dollar, and not surprisingly, we're also getting a kind of a similar idea on the pound against the dollar as well, which I know some of you are trading. So here we can see if I just look at the weekly chart. Okay, we just go out for it for a while there. We can see once again a little bit like the euro dollar, the pound dollar has just ground its way up, which has accelerated as we've gone into 2018. Now, admittedly, a lot of that has actually been to do with dollar weakness, which we've talked about in our previous Tuesday morning sessions. But what we've seen is we've raced up towards we're above that kind of 140 level. But in the last sort of 48 hours, what we've had in the UK is we've had a little bit of interest in, let's say, once again, in Theresa May's premiership. That has sort of given people a few little, few nerves, a few jitters. And with that, we start to see a kind of, we've seen a little bit of a retrace in sterling. And what I've been looking at is, there we go. We just draw on that line there. We had that We had that kind of 140 zone there that you know was pretty significant barrier. We got above it, and what do we see today? That actually, you know, we've pulled back to that. And what I'm looking at is, you know, maybe that 140, you know, was resistance. Now does it turn into support for us? And if we go down on the sort of smaller time frames, we can already see that actually the 4-hour candle there has you know, given us a very nice sort of bullish pin bar there. It's engulfing. That gives us, you know, once again another little opportunity to take a sort of a trade with that kind of longer with a sort of a longer term sort of uptrend, and that's what we're looking at here. And if I go down just to even one or two more sort of trade ideas, well, actually, you know, we can see even in the last sort of 30 minutes or so, you know, that sort of pound has come flying back there, flying back. But remember, we always think of surge then rest, surge then rest. And it wouldn't surprise me if once again we came back to sort of retest this 140 region, the 140 zone there, and I'll be looking to be a particular buyer there. So at the moment I have sort of you know, an order in there to buy at around about 140.10 with a stop loss of around 139.75. So I have around about 35 pips of trade risk. And then I'm targeting the sort of 141 area, okay? The 141 area, which, you know, gives us around about 90 pips of reward for approximately 35 pips of trade risk. That gives us a you know, a nice risk to reward of around about 2.5. But as we can see, this is already launching itself forward with glee here as we move forward, and that in itself is just an indication that, you know, we've had a little bit of dollar strength over the last 24 hours, but a lot of that due to an increase in the sort of the 10-year yields that had an impact on the dollar. But I still don't think this dollar weakness story is overly done. We've had a think of it like a season. What we've actually had and looked at is a case of, you know, even in winter you can have a warm sunny day, and in the same way even in the summer you can have a rainy day, and that's what we have here. You know, we might have had a little bit of dollar strength over the last day or two, but I think that is actually, you know, that's just a little bit of a pullback, and what we still see is that element of sterling and euro strength, and I want to be a particular buyer of that. And that kind of gives me sort of, you know, interest. It gives me opportunity. I'm trading the majors, which have got great spreads here. Admiral offer fantastic spreads on trading the majors, you know, and it also means that, you know, I have good liquidity and good movements, and that means that, you know, I'm in a position to sort of trade you know, efficiently and effectively within those markets. So I apologize once again for the delay. That's purely mine. The computer laptop blowing up there, and you know, I apologize that with the you know, not in any way intended. But hopefully those two ideas give you a little bit of something that you can take forward and work with today. Keep an eye on that. You know, we have German CPI out later on today. We've also got FOMC later this week as well. All of those will have impacts upon the both the euro and the dollar. And as always, the sort of sprawling news that is, you know, what's going to happen with Theresa May will have impacts upon sterling. And as always, traders, you know, all these new things, they happen and they offer us an opportunity, and that's what we're always waiting for. So unless you've got any questions, I'll sort of hand back there to Jens and let you get on with your trading day. And as always, I wish you the very best of success with your own trading endeavors.
For today, we are fine. Thanks a lot. And yes, we know we are knowing the real life. Sometimes computers crashes or something like that, but a couple of minutes delay, not a big deal, not a big problem. Thanks a lot. Tomorrow is another day. Tomorrow, the day trader of the day will be Mike. So if you like to join us tomorrow, we will be there. And if your time not allows to join us every day, a couple of hours later, usually you will find the recorded webinar at our YouTube channel, Admiral Markets. youtube.com/Admiral Markets, that is the address. So check out also YouTube if you like. Greetings from Berlin. Bye bye.